It is 7:12 a.m. You are still half asleep when your phone lights up with a banking alert. Home equity line account update. At first, your brain does not even process the words. You do not have a home equity line. You open the email anyway, because weird financial emails are either spam or a problem, and this one looks way too professional to ignore. The screen loads. Account ending in 1842. Available credit. Recent opening date. Property address. Your house. Not your old address, not some typo across town. Your house. The kitchen is silent. The coffee has not even started dripping yet. And somehow your home is already attached to a loan you never asked for, never discussed, and definitely never signed. This is the kind of moment that makes a person stop moving. Not because the number is large, because the threat is wrong in a way your brain cannot organize. Credit card fraud is money. This is your house. If a random card gets opened in your name, that is bad, but your house is not supposed to be draggable like a debit card. That is why a fake loan tied to real property feels so violating. A HELOC is not just debt, it is debt secured by equity, which means the fear is not only who borrowed money. The fear is what records now exist, who believes them, and how many institutions are already treating this as real before you even finish your first phone call. That is the part people underestimate. The system does not react to your feelings. It reacts to paperwork, signatures, recordings, approvals, automated notices, and database entries. So, when something fraudulent touches real estate, the panic gets heavier than normal identity theft. Because now, you are not only trying to prove that a person stole from you, you are trying to prove that the machine should stop believing what it already accepted. There are different versions of this story. Sometimes it is a pure identity theft problem, stolen personal data, forged documents, a lender or broker somewhere processing a file that should have stopped earlier. Sometimes it is deed fraud or title fraud. A fake transfer gets recorded, fake authority gets created, then a loan gets attached to that fake reality. Sometimes the homeowner first sees it as junk mail, then as a clerical error, then as a life interruption, then finally as a housing emergency. And that escalation matters, because the first reaction is usually disbelief, not action. You keep rereading the statement. You zoom in on the property address. You stare at the last 4 digits. You wonder if someone with your name exists somewhere else. That hesitation is normal, but fraud around property survives on delay. Not because people are lazy, because the whole thing sounds impossible. It feels too stupid to be real, and too real to be a simple mistake. This is where the emotional damage gets worse. You call one number, and they ask for the account number tied to the HELOC. You call another, and they ask for the recorded instrument number. You call a third, and they tell you to speak to the lender. The lender tells you to speak to the county. The county says they only record documents. Customer service says they cannot explain fraud decisions. Everyone sees a slice. Nobody sees your whole panic. And that is why homeowners describe this kind of event like falling through the floor. Because your home is supposed to be the stable thing, the anchor, the boring asset, the place you are allowed to stop watching for 5 seconds. Then one statement turns it into an investigation. And suddenly your normal life has a fraud administration job attached to it. Not next month, now. The biggest mistake is treating this like something to think about after work. If the loan is fake, time matters. Not because one phone call fixes it, because early calls create a paper trail. You want the lender's fraud department, not generic customer service. You want copies of everything. Application data, signatures, recorded documents, closing records if they exist. You want to check the county recorder or land records office for anything filed against your property that should not be there. You want your title company, closing attorney, or whoever handled the purchase to know immediately if the issue touches ownership records. You want your credit reports locked down, your identity theft reporting started, your notes written cleanly while the sequence is still fresh. This is not about becoming a legal expert overnight. It is about refusing to let the only organized timeline belong to the fraud itself. People hear fraud and imagine the only battle is proving innocence. But the more exhausting part is what happens while you are proving it. Can you refinance while this sits there? Can you sell? Does a title issue freeze your next move? Do letters keep arriving? Do servicers keep generating notices? Do you need an attorney? Do you need time off work? That is why real estate fraud stories feel bigger than the amount on the paper. The fake loan does not only threaten money, it threatens mobility. It can jam up decisions you were already making, move plans, refinance plans, inheritance conversations, divorce paperwork, estate cleanup. Everything that depends on clean ownership records suddenly becomes slower, uglier, and more expensive. And the cruel part is that even when you did nothing wrong, you still become the project manager for the fix. If you already have a mortgage, your brain immediately starts asking whether this fake loan can interfere with the lender who is already attached to the house. If you own the home free and clear, the panic is different. Because the whole point of finally owning it outright was supposed to be simplicity. No bank above you, no payment chain, no extra leverage attached to the property. So discovering that your fully owned home can still be dragged into a fraudulent borrowing story feels like a betrayal of the whole finish line. That is why this topic grabs people so hard online. It breaks the emotional promise of ownership. People think the danger ends once the deed is recorded and the keys are in your hand. But sometimes the threat arrives later, disguised as a statement that should not exist. Once you understand what the loan means, your brain starts producing images you never asked for. Some stranger signing your name, some office approving documents, some system deciding your house was available to leverage. That is why this kind of story lingers. It is administrative on the surface, but invasive underneath. Your home stops feeling like shelter for a minute. It starts feeling like a file other people touched. And even if the fraud gets reversed, the psychological hit is that ownership suddenly feels conditional. That is what makes a fake loan on a real house so brutal. It is not just unauthorized debt. It is the feeling that somebody reached into the quietest part of your life and turned your home into collateral without permission. One boring morning, one impossible statement, and now the safest thing you own feels like something you have to defend.